Hey friends, I want to welcome you back to another episode of Making Sense of the Markets. Today is Friday, March 27th, 2020. This is Dan Keller, your mortgage advisor over at CrossCountry Mortgage, and I am officially on lockdown. I have been requested to stay at home by Governor Jay Inslee, and my family and I are being obedient, and we are doing exactly that. So I hope this message finds you well, and I hope this message finds you at home, enjoying your family and your beautiful home. Today, I want to talk with you about three conversations that I'm having with every single client right now, whether they are refinancing a home or purchasing a home. And if you're a real estate professional, you're going to want to pay attention to this information. It's so relative. If you're a home buyer, this is something that if you're buying in 2020, you want to pay attention to this information. Guidelines are changing. They're changing fast, and they're changing because of risk. And I'm going to go over the why behind the what. But let's first talk about the mortgage market. What did rates do this week? They stabilized, which is incredible. I love it when mortgage rates just kind of level out for a while, take a break from the ups and the downs. So this week we are locking 30-year fixed rates in the low threes, 3.1 to 3.2, depending on your credit score and type of property purchased and down payment or equity. If you'd like an individualized quote, please reach out to me and I'm happy to get that over to you. But for right now, an incredible opportunity to save money, which brings me to a message of gratitude real quick. This last week, we received 27 referrals from the video that I did last week, from clients of ours that we're working with. What I'm seeing and hearing right now is the big banks and credit unions and other mortgage lenders are just not calling people back. They're not helping them. They're maxed out. And although we are busy, I will never shut my doors or turn people away. So I appreciate your referrals. If you're watching this and you would like to save money on your mortgage, or you know someone who's having a hard time, please refer them over to us and we'll take really, really great care of them. Risk. Let's talk about risk right now. This last week, we saw 3.5 million Americans file for unemployment in March. And they're saying that April is going to be just as bad, if not worse, due to this coronavirus. And so what lenders are doing right now is they are changing their guidelines. They're changing or suspending or eliminating programs, and you're going to see more of that. So real estate agents are going to want to pay attention to this. State bond, zero down loans, suspended in the state of Washington right now because of the risk associated with that loan program and the record number of people filing for unemployment. Same thing with jumbo mortgages. Jumbo mortgages in Seattle is a loan amount that exceeds $741,750. They're going to require now that you put 20% down or more. They're going to also require that you have a maximum debt ratio of 43. Some lenders are saying 37. So things are changing there. FHA and VA loans at big banks and credit unions, they've already drawn the line. They will not even talk with you unless you have a credit score over 680. We're still at 620, but there's things that are changing right now. If you find yourself in either three of those categories and you need mortgage assistance, reach out to us and I can help you with that. The other thing, USDA zero down loans for first-time home buyers requires a 4506T tax transcript from the IRS to close that loan. The IRS office is closed right now, so that loan program is suspended. Let's end this though with two positive things. Turn times at big banks and credit unions, 60 to 160 days to close a transaction right now. We at CrossCountry Mortgage, closing loans, no problem in 30 days. So that's great news there. Appraisals, turn times with appraisals are awesome right now, business as usual, and that's largely due to Fannie Mae allowing appraisers to do drive-by appraisals, which is awesome. So great news there. Let's close with the mortgage assistance and relief options. Listen to me, please. In 2008 to 2010, I saw a lot of great families get bad advice, which then caused them to be in an incredibly poor financial decision because their mortgage was an adjustable rate mortgage, or because they got reduced hours at work or laid off, because they were underwater on their house, stopped making their mortgage payment. Don't do that with COVID. You're seeing advertisements out there that are saying get 12 months free, get a 12 months forbearance, get 60 days off of your mortgage. No. If you qualify for that loan program, meaning if you have COVID or if you were laid off or your hours are reduced because your employer made cutbacks, you can apply for those loans, those loan program assistance programs, but you can't be behind on your mortgage and then go apply for those. You have to notify your servicer right away. So below this video, I'm going to give you instructions on what to do next. The first thing is you need to call your servicer. That's who you make your mortgage payment to, and you need to ask them for help. Number 2, you need to apply for these programs and you need to document it. And then number 3, if you can't do 1 and 2, I want you to call me and I will help you with this. You don't have to be a past client of mine. I want to be a resource to our communities and help people through this. So if you need any help with this, let me know, but please don't fall for any gimmicks. You're gonna get hurt. If you miss a mortgage payment, they're gonna come after you and it's gonna ding your credit unless you qualify, okay? If you have any questions, let me know. I'm here to be a resource. I appreciate every single one of you guys watching this and sharing this. If you found it valuable, give it a share so that it can help someone that you know, and I'll see you again on Monday. Have an incredible weekend, okay?